Meta and Mark Zuckerberg's obsession with his VR glasses, which has tanked that stock, and post-markets also, hit the Dow futures as well. But if you look at how trade closed in the US, it was a bit mixed because a lot of key data is awaited over the next couple of days. The next 48 hours becomes quite important. You're going to have Q1 GDP data, jobless claims data is going to come in. Your PCE, which is a very crucial inflation data indicator, also comes out later this week. So let's just pull up how US markets have closed, and not a great sort of outlook coming in there. But like I said, it's all about Meta. So Meta's numbers were actually better than expected. Their guidance, though, was weaker than what the street was penciling in, and that really caused some trepidation. To make things worse, when Mark Zuckerberg got on the call and just talked about metaverse and all of the hardware along with it, all of the projects which have lost Meta tons of money, even though everything else is working for them, the street didn't like it. So that stock plunged 16% in future trade as well. Bonds are okay. Treasury yields saw a bit of a spike up. The 10-year is above 4.64% ahead of all of that key data I just mentioned. Crude is interesting. A bearish trend on crude coming in. There's this Goldman Sachs report which talks about how all the shipments that were stuck in the Red Sea all of these days have started offloading. So your inventory levels are also going up. Brent is below $88. I'll just pull up Asia. Asia also a mixed sort of start. You had good GDP data from South Korea, but meanwhile, no great cues coming in there. And as far as we are concerned, as Samina said, you're probably going to see a softer start today. And the big focus is going to be on banks, I think.
Most certainly. So, I mean, one, of course, the soft global markets impact an otherwise fairly bullish sentiment, and it's the monthly expiry, and we know that the monthly expiry is no longer what monthly expiries used to be in the past, but it's still an expiry day. Therefore, volumes, volatility.
I think it's tough for traders to even keep track of which expiry on which day on which index.
But for historical parlance, Thursday, last Thursday, the
last
big monthly expiry
half an hour becomes very exciting.
Could be very exciting. So the soft global markets may impact that bullish sentiment. And, Bank Nifty, two parts, I think. The Bank Nifty will see the Kotak Bank impact, but the momentum is still in favor of the banks because we've had 4 straight days of gains. And remember, I mean, Kotak and Axis both have a 9% weightage on the Bank Nifty. So in some sense, Axis Bank, if it manages to do well, could negate part of this fall of Kotak. And there is two other things here. One, in Kotak's case, it may be a bit of a, taking the band-aid off with a whiff. So whatever impact has to happen probably happens in today's session. Maybe we see some of the money flow to some of the other banks as well. That is also in the conversation, that will people move to the other banks simply because people might believe that for the near term there might be issues in Kotak. And we'll talk about Kotak in greater detail, but I'm just saying that Kotak and Axis, in a weightage perspective, negate each other, and if Axis does well, it might just help cushion the blow or whatever blow Kotak brings to the Bank Nifty. Telecom has taken a bit of a breather yesterday. Today, Vodafone FPO shares come in, and there might be a bit of a breather for Vodafone yet again. Also, maybe for some of the others, but most participants are bullish on telecom with a slightly medium-term perspective, which is 3 to 6 months. So maybe a couple of days of a pullback, but then the winning ways might return. But the other interesting thing, and while we'll talk about all the numbers, the other really interesting thing is what's happening in chemicals, guys. Just the way some of the stocks are moving, chemical and fertilizer stocks, Deepak Fertilizer in case in point yesterday. I just saw nitric acid prices having risen quite significantly in the last 5 or 6 odd weeks. And yesterday or day before, Aarti and Gujarat Fluoro and some of the others were active too. It's a sector that is coming out of a 3-year hibernation. Could be very interesting to watch if indeed chemical prices rebound because of the global PMI upticks, and that brings about a bit of a change in prospects for some of the chemical names because the valuations are in favor. 3 years ago, they were completely out of whack. Currently, the valuations are so firmly in favor of chemical stocks. Might be an interesting pocket to look at.
Yeah. A subgroup of that which you mentioned, fertilizers. I mean, Deepak, Chambal, Gujarat State, they've all gone up 14% in the last 1 month. But I think the play there might truly be election play because defense, fertilizer and sugar seem to be sectors which historically do well ahead of elections, and with such a clear mandate expected by the street, this space looks good. I had
just to add to the election play point, and I was speaking to a couple of analysts yesterday, and the take is that in the July budget, since all other things are looking okay, the only soft spot, so to speak, is rural demand. A lot expected in the July budget, which couldn't be front-loaded, of course, in the pre-election budget, to come in for rural demand and to boost the rural economy. So yeah, fertilizers would definitely be one segment which would do well.
And Gujarat State is leading the gains. It's up 26% in the last 1 month, while its peers from the sector are up anywhere between 14 to 16%. I think Niraj already highlighted Vodafone is going to be an interesting one to watch out for. Got hit by 9% yesterday, and today, of course, it opens now. Whether or not traders are going to bid for this, Angel One, the likes of Angel One, who track the derivative and the technicals of Vodafone, have said that you must avoid aggressive bets. It's a tight trading range, but you could be caught on the wrong side, very likely. They've had a successful fundraising plan. We've seen that institutions have been quite excited. Retail participation has been slightly lower. And I think that is something traders will want to watch. And this is what we talked about in the early part of this week, that this counter will see some selling on the day of listing, largely because you will have ultra HNIs who may come and dump the stock.
I'm waiting to see.
I said that to you yesterday. 9% for all yesterday was a precursor.
You predicted that. Now, the question is that once the listing actually happens, do more people want to come
in and bid for it,
and pick up, or do HNIs actually exit? That'd be interesting to see that data.
Of course, the price has moderated substantially after that big fall yesterday. But apart from that, the focus continues to remain on earnings, and you had a few big ones. Just a quick word, Tata Consumer sold off quite sharply in yesterday's trade. A 6% cut on a Nifty company doesn't seem like fun. They reported numbers that they believe were pretty good, but I think the street doesn't seem very pleased. But just moving on from there, the ones that we are watching out for this morning is going to be LTI Mindtree. It's been another rough quarter for LTI Mindtree. Post the merger, things have been tough for the merged entity. That's how the numbers look. The revenues were down about 1.5%. EBITDA declined 5.7%, and profits were also down about 5.9%. Vertical-wise performance, healthcare and public services contributed 13%. BFSI continued to see a shrink, down about 6.6%. Consumers remain flat. Across geographies, North America did okay. Europe again declined 3.6%. So they're not really seeing an uptake in markets ex-America. In fact, the rest of the world as well was down about 8%. Brokerages, interestingly, aren't too disappointed, which is actually a good thing maybe. HSBC, for instance, as a hold with a target price of 5,380. There have been no upgrades that have come in, but they're not enthused on one hand, but on the other hand, maintaining their call on LTI Mindtree. They have said that the margins were weak on back of project cancellations. The management we talked a few weeks ago indicated that what they're really seeing is discretionary spending continues to remain muted, but cost optimization is where the business is coming in, and it's only a matter of time, maybe 2 quarters out, that you will see a better picture emerging for one of the big boys now.
Samina, but 28 times earnings, you reckon, you've spoken to the management recently, case for a downtake right here, because a stock which is not promising growth in FY25 trades at 28 times.
And unfortunately for them, they've also had a bunch of senior exits. I mean, Debashish Chatterjee himself steps down next year. So there is a little bit of uncertainty around it, but I mean, you know, it's funny how the markets read into so much of this, right? Because it wouldn't surprise me if the stock opens the gap up on anticipation that things will get better. But they did indicate that AI was a good space, operational. The money, and one thing that was very interesting that stood out, he said while they're working on operational efficiency, cost optimization for clients, a lot of the clients now, with the money saved on cost optimization, are actually moving to transformation. So all that money saved becomes your discretionary spend, and that is interesting because.
But that'll go to the ones who are ahead on the AI curve. So
I also think it's existing clients you'll end up having a relationship with, and then there's some comfort, and that was a big story when they talked about the merger, right? They said they would offer a bigger and better suite and would leverage on each other's client book. It's not happened yet. But the hope is that things do settle for the big boy now amongst the IT companies. Apart from that, HUL, I'm not sure how you guys are reading this one. Revenues are down, but it seems like nobody is very excited about the numbers coming from HUL. So expectations were muted. So they've done okay in line with a weak sort of expectation from HUL. Revenues were down marginally. Profits were down about 5.7%. EBITDA was down about 1%, and margins have remained almost flat. 23.1 versus 23.3 is what we have. Volume growth, just like the others, like Tata Consumer, was also lower, only came in at 2%. Pricing growth was marginal. Urban demand continues to drive growth. Rural is still a sour point for most of these consumption majors, and a large part of their portfolio is seeing some deflation. So margins could be set to improve on back of that. But no price hikes immediately expected. It's funny, when coffee inflation is hurting their volumes, contrary to what it did for Tata Consumer, it was the higher coffee margins that actually helped that business.
Because Starbucks,
unbranded coffee
well,
that did well for them, but clearly hurting HUL.
Yeah, and the realizations have been negative now for second consecutive quarter. It does seem, I mean, everybody is banking on FMCG commentary turning thus far in the two companies. We haven't quite seen that.
We've talked about this for the last 4 to 5 months, and they've all talked about how you're betting ahead of the curve and it's only a matter of time. But
not looking cool.
It's not looking good, and we have various things to blame. I mean, somebody might say monsoon. Sunil D'Souza said yesterday Holi was delayed. And it just seems like we seem to be justifying reasons for
the rural demand is weak. That's a fact. Some of these segments are hurting. I think another big takeaway, no real stock impact really, but for me from HUL is that they are rebranding their Horlicks. It's no longer going to be called a health drink. It's going to be a fitness mix. So they have to do that in terms of the norms, but I mean, some of their products are iconic products, and the fact that they have to rename them, rebrand them, talks about
and I think this quarter as well, marketing expenses had spiked up quite largely, so could be attributed to this rebranding.
Yeah. On a comparative note, and I think we were talking about this yesterday, between a Tata Consumer and HUL, all other things being same in terms of weakness that the space is seeing, and HUL might fare better just because of its size and market reach and portfolio, etc. Now, having said that, there's some good numbers to watch out for as well, and Axis might be the counterbalance to Kotak, as Niraj was saying. So I'll just talk about Axis for a second, and we're going to have a detailed chat later on banking space. And Axis as well. But Axis, suffice to say, it's a beat on NII, PAT and asset quality. What the street is possibly going to like, and that's what you're seeing in a lot of notes which are coming in as well, including the Nuvama note, is the 5 basis points margin expansion Q on Q. And that's a positive surprise that the street was perhaps not expecting. The reason that's happened is because of lower cost of funds. What might not be too enthusiastic, but you might not see an immediate reaction to it, expect Axis to have a plus on opening, but their guidance growth was lower to 300 to 400 bips versus 400 to 600 bips earlier. So a slight downtick in that guidance growth. Deposit growth is good, growing well, but still below their loan growth. I think what's also interesting from a little longer term perspective is that Amitabh Chaudhry, his tenure ends in December 2024. Street will be watching to see if there is an extension over there. Just quickly take you through what Nuvama is saying on Access. They've reiterated a buy with a target price of 1270 on the stock. That's nearly a 20% up streak. They say the NIM expansion is commendable given the competitive industry. Axis will likely grow deposits faster than loans in the near term. So they expect that to be, reverse that ratio to be positive. They say Axis offers an attractive risk-reward ratio as well. Macrotech is the other one. Again, very good numbers overall. If you look at on year, their revenues have actually gone up nearly 200%, but 23% up at 4,018. EBITDA is up 35%. Margins are up about 234 bips. Their net profits are down about 10.5%. My colleague Anushri tells me that the reason for that is higher depreciation costs, and that's not something perhaps that the street will take too negatively, because look at the metric that everyone loves, which is pre-sales targets, 17,500 crores versus 14,500 crores. So real estate is that one bet that no one wants to go against, even if the numbers don't look great, and in their case the numbers are actually pretty decent. So expect maybe a positive take on a Macrotech.
Yeah, the guidance is very strong on Macrotech. From 14,500 this year to pre-sales of 17,500 crores.
Yeah, that's what I just said. That pre-sales number is what everyone loves.
Yeah,
so
the number was very
I just don't know where all this money
it.
is coming from. Is it the equity market that's fueled a lot of wealthy people who are going on and buying homes? Because that's usually how the cycle works, right?
It could be equity markets. Around election cycle also you see a lot of interest in real estate coming in. But could be one way or the other. People want those big homes and just small little segue. Every new ad you see for a new property development will be with decks, larger homes, all of those premium kind of things, and Macrotech is up there. Indian Hotels is the other one. Revenues up 17%, EBITDA up 23%, a little lower than what the street expected, but on the face of it, good numbers. A couple of, I would say, not too bad brokerage notes on it. Margins up 167 bips, and net profits also up 29%. The average room rate was up 4%, and revenue per available room was also up 10%. So, Indian Hotels, decent set of numbers, I would say. We'll be talking to the management a little while later in the day as well.
Yeah, but what worries me, the valuations out there, but depending on whether you take 12.5 or 13 rupees EPS, trades at 50 times. It's an expensive stock. Let's see how it trades out today. Speaking of expensive stocks, 3 stocks on my list. OFSS has rallied quite a bit, but look at the quarterly performances, and we saw this happening with Nucleus as well. Banking product companies haven't had a great quarter. OFSS revenues down 10%. EBIT margins at 43.6 versus 46.6, and PAT down 24%. So one more stock that could correct today. In fact, I have bad news. So OFSS is one. 5paisa Capital, brokerages have done really well. 5paisa on the revenue front has done really well. But look at the EBITDA margin, 18.2 versus 30% quarter on quarter, 28% YOY. PAT, as a result, down 61% at 6 crores. Versus 15 crores. That's a substantial pullback in profitability, and the sharp decline in profitability for 5paisa Capital is due to higher employee cost and the higher customer acquisition cost. So that's principally the reason why 5paisa Capital Q4 numbers disappoint and the stock could likely react. And guys, Dalmia Bharat, the last one, revenue is up 10%, but the PAT down 47% YOY. EBITDA margin at 15.2 versus 18%, and because EBITDA per ton was down 22%, 7.5% drop in realization per ton ahead in a busy season. Something's gone wrong with Dalmia Bharat. Very likely that this could be a large reaction in the session today as well. 3 stocks that stood out for me.
Yeah, but the stock this morning to talk about is Kotak Mahindra Bank. And so much action happening there. Now, just to break down exactly what the RBI has said yesterday and what those concerns are. In fact, my colleagues Pragati and Mimansa are in the studio with us with exclusive details. And here was the question, guys, because the RBI note and the press release basically said IT systems weren't up to the mark. But what exactly was going wrong?
Right. So Kotak Mahindra Bank's curbs, everyone knows RBI has put them. And like you rightly mentioned, 2 major points that we are trying to look at here is, of course, one in terms of customer onboarding that has been stopped in terms of the online and the mobile banking channels. And the next that we are looking at is the stopping of the issuance of fresh credit cards. Now, sources told us that we are looking at primarily 5 major concerns as to what RBI found in terms of the IT infrastructure at Kotak Mahindra Bank. These are the 5 big concerns that the RBI raised issues on. The first is the scalability of the core banking system. Now, RBI's press release did mention that the core banking system of Kotak Mahindra Bank had significant troubles and significant issues. So sources told us that the scalability of that core banking issue, that is the extent to which the core banking system could be developed or be used, was one of the issues that RBI raised concern. The second point that we are looking at is the multiple outages or the downtime that were happening on the online and the mobile banking system of Kotak Mahindra Bank. Sources said that at least 30 to 40 hours of outages were being reported in a year, and that is a significant downtime which was causing a lot of inconvenience to the customers. But why exactly this downtime was happening? Why don't you tell us?
Like you mentioned that 30 to 40 hours of outages in a year is a big number, and anything that is more than 30 minutes of outage is considered to be sort of disaster for a bank's digital banking channels. So on April 15 was the last time when Kotak Mahindra Bank had faced a system outage on UPI transactions particularly, which had brought a lot of backlash from customers on social media as well. So what sources were telling us is that the high volume of digital transactions, in fact UPI transactions including, are a reason for which these IT infrastructures at banks are in question, and their resilience is in question, and whether banks are able to upgrade the technology through vendors and through their in-house tech team. Are they able to improve the scalability of the IT infrastructures? So when we ask that, is it a problem from the vendors side, they're saying that it's not completely a problem on the vendors side. It is also how the banks are strategizing their IT systems and whether they should look for constant upgradations and how to manage their disaster recovery programs. So high volume of UPI transactions, including to put it broadly, the digital banking channels need to be robust, and this is what RBI was concerned about for past 2 years, and finally they put restrictions on Kotak Mahindra Bank's online banking channels. If we talk about how much of the business is sourced through digital channels from Kotak Mahindra Bank, a lot of savings accounts are opened through Kotak 811 digital channel. On asset side, a majority of sourcing on unsecured products is done digitally, and these segments have grown 40% YOY in the last 9 months versus overall growth of 18% YOY. So a lot of business is what the Kotak Mahindra Bank gets through its digital channels. But of course, we reached out to Kotak Mahindra Bank on these details, but we haven't heard from them yet. Although they had sent a common response to all the reporters saying that that they're working with RBI and they will continue to cooperate through external audit, and they will fix those issues.
Exactly, Mamansi, you're absolutely right. So while RBI's restrictions came around 4:30 p.m., about 2-3 hours after that, Kotak Mahindra Bank did put out an official communication. In fact, we are showing it on our screen for the benefit of our viewers as well. The bank said that it is not seeing any material impact on the business despite these RBI curbs. However, it is working with its customers and internally as well. That's the nutshell that I'm explaining it to you, in order to build a robust IT infrastructure. Interesting bit is that like my colleague also mentioned, while we reached out to bank on these specific points as to what were the specific issues of the RBI in terms of the core banking system or other concerns as well, the bank has not gotten back to us yet, but we will bring our viewers latest updates as and when we have them on that.
Right, thank you for that, Pragati and Mimamsa there with those exclusive details on what really went wrong with Kotak Mahindra Bank and why RBI took this fairly stringent action to stop all onboarding of new customers via digital or mobile. And there's a Citi note out this morning which says 90% of their customers are onboarding through digital and mobile. To stop all their fresh credit card onboarding is going to pinch. But how much is the question? Rahul Malani is joining us now. He's DVP Fundamental Research Share Khan by BNP Paribas. Very good morning to you, Rahul. Great to have you on the show. I was looking at a few of the notes that are out this morning, and there seems to be a bit of a temperance in terms of how much of an impact this is going to have in terms of revenue for Kotak Mahindra Bank. What is your take? This RBI action is fairly harsh, isn't it?
So firstly, good morning. So clearly this is a major setback for the bank, and if we look at the majority of the retail assets as well as the retail liabilities were sourced through the digital mode. So surely the impact will be in the double digits, because retail assets and liabilities are the fast growing segments, and in terms of gives higher profitability to the overall franchise. So even if the percentage of the is certainly lower, but it will have a high impact on revenue as well as the earnings part. And anecdotally, we have seen in such cases is that it takes around around a year or 12 months period for the satisfaction of the regulator to see, because it will take special audit further in case of before lifting the ban, and it will take time around at least for the 12 months for the regulator to be satisfied around these issues, because deficiencies have been large. Otherwise, RBI would not have been harsh, and they had given them continuously. There was deficiencies in the IT system for the period of FY22 to 23, as well as so. We believe that it will be a phenomena for at least for the 12 months, and around double-digit impact could be seen in the revenues as well as the earnings.
And the math, double-digit impact, but can you quantify that for us? Because let's not forget the deposit growth is already slow. Now, of course, if they can't add new accounts digitally, it's going to further lead to an impact on deposits. Of course, you can still do paper onboarding, but have you got the numbers down?
So basically, it will be very early on the numbers to comment upon. So we continue to believe that here, as I mentioned, that it will have a double-digit impact in the range of at least 10 to 15%. Just working roughly on the paper, so it comes around 10 to 15%. But we would certainly await clarity and await some commentary on the from the management during this quarter 4 results.
Rahul, I'm wondering how long this kind of pain will last. Let's hark back to HDFC Bank, and maybe not the exact same issue, because we don't officially know what is this IT problem that the RBI was unhappy with as far as Kotak is concerned. What do we know is that it's been going on for 2 years. There were enough conversations between both the sides, and there was no solution found. But eventually, HDFC Bank also fixed the situation. And that would be my question to you. What would you do with the stock today? You are likely to see a negative sort of an impact on opening. Is there an opportunity to accumulate? Would you wait for things to sort of even out before you take the next step?
See, as far as a strong buying idea is concerned, see, this is one of the first instances in the history of Kotak Mahindra Bank. And during this digital era, the technology risk and all this digital risk is of utmost important. And we believe that whatever instances in the past have been taken, we believe that this is one of the few instances this is the first instance for the Kotak Mahindra Bank. Surely, market would react negatively because the impact of earnings and the revenue impact on the revenues and the earnings is quite major. So we believe that after a good correction, or say for example today, if someone gets around, if we see a major reaction of more than 10%. We should be looking at holding the stock from the medium-term perspective, because all this will reverse in around 1 year to 1.5 years time period maximum. So we don't believe that beyond this is there is a
Sorry, Rahul, did I
risk.
just hear you saying it's going to take 1.5 to 2 years to reverse this? Are you talking about the IT systems
12
issue?
months, at least we believe that 12 months will be taken.
For what? 12 months for what? The problems.
All these IT deficiencies and lift the ban overall.
So if there is a ban for 12 months on onboarding new customers digitally and issuing fresh credit cards, what kind of an impact do you see that on revenues?
So basically, I think that there will be certainly a bank may enter into certain of the partnerships, or if it is not able to get the individual on digital onboarding. So a lot of more clarity has to be received, and what substitutes can the bank garner during this period?
Rahul, just one quick question. I mean, the timing of this is rather unfortunate with the new CEO taking charge as well, Mr. Vaswani. Do you think this could hence be a double whammy for them? Because the first job, I guess, that he'll have to come up and take up is try and get Kotak out of this RBI ban. And given the fact that he's not an insider, how are shareholders going to look at this? Would they get punished a little bit more in terms of the idea of what you want to do with the stock?
See, definitely it will be a first and topmost priority task for the new MD CEO. And all these things, he has a good digital background also. So we believe that it will be a tall task for the bank, but I think so that they will be able to manage all those things within a reasonable period of time.
Right. Thank you, Rahul. It's not looking good for Kotak. Rahul believes that if you do see a 10% cut, it may just be an opportunity. They will resolve this. Remember, the last time this happened was with HDFC Bank all the way in December 2020. It took HDFC Bank 15 months to fix the tech and for RBI to lift the ban on them. Well, we have with us Dipali Pant Joshi, former ED at RBI, who joins us to understand what this really means and where the glitches are. Morning, Dipali. Thanks a ton for joining in. Dipali, it's not just Kotak, right? The RBI has been cracking down on regulated entities over non-compliance. In the last 3 months itself, it's banned Paytm from accepting fresh deposits, IFL Finance from giving new gold loans, and JM from undertaking any new business related to shares and bonds. It was Bank of Baroda in October 2023, HDFC Bank all the way back in 2020, and now it's Kotak. What are you making of this? How big is this worry?
I'll just explain. You see, the RBI as the regulator has your interests at heart. I mean, the customers' interests come foremost with the RBI. The trigger for this was that on the 15th of April, for 12 hours, just imagine if you were coming from abroad and you just had your card with you, your Kotak card, you could not access banking. You could do nothing. And that sort of shakes confidence in the banking system in total. So the RBI inspected Kotak for 2 years consecutively. They spoke to Kotak and found serious deficiencies in sustained non-compliance. What was at risk? Their information technology, their risk management, and their information security governance. Now, they were in a rush to grow the retail book, so they kept onboarding the customers, but they failed to build IT systems and controls commensurate with the growth. So now the issue is that this under Section 35A, what is Section 35A anyway? It actually confers on the Reserve Bank the power to issue directions which have the force of law. So now the RBI has to assure itself that the company on which it is imposing these directions is in a position to pay its present or future depositors in full, as and when their claims accrue, that the affairs of the company are not being conducted in a manner prejudicial or detrimental to the interests of the depositors. So at heart is the information technology, security, risk management, which Kotak was found deficient in. Who does that put at risk? First of all, let's see, why did the RBI take this action? There were concerns which arose out of 2 inspections, 2 consecutive years, 2022, 2023. What were the deficiencies? Serious deficiencies, non-compliance. 1, IT inventory management, patch and change management. 3, user access strategy, which you just saw happen on the 15th of April. And you also see vendor risk management, that you're completely dependent on the vendor. And most importantly, data security and data leak. Now, you definitely want your data, any customer wishes his, her data, not only to be confidential, but the bank was just not taking heed. Now, the important and emerging concerns are know your customer concerns, which were also there. The second thing is that there is, you see, Kotak by itself can jeopardize the entire financial system, which is fragile if there is no settlement finality of transaction. I mean, you initiate a transaction, I'm waiting for the money to come in.
Right.
It doesn't come in. There's a gridlock.
Madam, if I may, Dr. Pant,
yes.
If I may, so understandably, completely, RBI has to protect the consumers, the customers. The question is that the extent of the action, the RBI has now stopped onboarding of all new customers digitally. That's about 90% of how customers are coming on. All fresh credit card issues have also been stopped. Is it proportional? Is there proportionality to the action?
Yes, absolutely. Because you see, you are not able to manage your existing customers. We keep telling you that, there can be a data leak. Your KYC will lead to prevention of money laundering, anti-money laundering concerns, which will overwhelm the entire Indian banking system. You do not have a robust IT infrastructure and a IT risk management framework. Now, in this grim scenario, if you do not take this seriously and keep onboarding new customers, you are threatening the new customers. The RBI has used very strong language. It has said you must cease and desist with immediate effect onboarding new customers through online and mobile banking. What does the Kotak Bank say? It says our branches will continue to onboard new customers. At least that's what I've read in the Indian Express. Now, if this is the blaze or blasé attitude which the bank has, then please also note that the RBI at the end of the direction says that you are not able to render efficient customers, you are threatening the financial ecosystem of digital banking and payment systems, and this is not prejudicial to any regulatory, supervisory or enforcement action. That means we can do anything to you if you do not wake up. And, as I keep saying, stitch in time saves 9. For 2 years you've been engaging, coming for n number of meetings with the RBI and all that we get our platitudes.
Right. Dr. Pant,
it's going to impact their business.
You're right. And I think they're also making an example of this because you're right. It's the interest of a customer, of a citizen that is, so the intent clearly is very clean for the regulator.
More than that, there is not only a demonstration effect, there's what is called a domino effect.
Right.
One by one, the dominoes keep falling, and where is your banking system then?
Right, no, point noted.
Kotak, we need to ensure financial and payment ecosystem insulated from risk, and internationally, we want people to trust our banking system.
No, you're right, absolutely. And Kotak
it's really a perilous situation.
No, you're absolutely right.
They will have cash burns. They will do a system audit,
You're right.
Which looks at everything, and then come back.
Right.
And if the RBI is satisfied,
hopefully things will move in the right direction, and I think that's what Kotak has indicated. They're going to do whatever it takes. With that, Dr. Pant, thank you. Thanks a ton for joining us today on the show. We'll take a quick break. Implied Nifty is indicating to a gap down start. Remember, it's the monthly expiry, so the markets may be a little volatile, and it should be interesting to see how things play out. Kotak will be the stock of the morning, unfortunately for all the wrong reasons. Stay tuned. We've got a lot more on the other side.
back with India Market Open. If you missed the first 35 minutes of trade, we've spoken about the trade setup and the key stocks that will react, and we've done a 15-minute conversation on the Kotak Bank saga and how Kotak Bank might get impacted in the session today. Now, let's try and assess the whole market-wide situation, because there is a market beyond Kotak which will react today and which will have an impact on your portfolios, presumably. Nirav Asher, Head of Equity Research at Latin Manharlal Securities, joins us right now on the show. Nirav, good having you. Thanks so much for taking the time out and being with us. For the issues that Kotak Bank might bring to the table, we have an Axis Bank which has performed admirably well in the quarter, and their guidance, Nirav, seems to suggest that their retail focus might help their margins and presumably growth as well. Just trying to understand what have you thought of both, but particularly Axis, which might actually react positively today.
Good morning and thank you for having me on your show. Yes, actually, looking at banking, I think the divergent trends which we have seen since yesterday, I think the strong regulatory action against Kotak, which we have seen, of course, is going to be a big setback as far as the stock is concerned in the near term. And as far as Axis is concerned, it's a very, very pleasant surprise on the numbers. We have strong operating income. We have a strong core operating fee-based income. And we have a strong NIM, net interest margins. And the deposit mobilization has also been quite strong. The CASA ratio is amongst the best in the industry. So I think all the operating parameters have improved. And in a way, I think if we are looking at the kind of regulatory action which might be detrimental to Kotak, it could work out to the advantage for banks like Axis Bank, ICICI Bank, and even SBI to some extent.
You missed out HDFC Bank, Nirav, out there. So just trying to understand if you think that HDFC and the others will benefit. That's the point you're trying to make, right? What is Kotak's losses, others gains?
Yes.
Okay, fair call. So that's on banking, and that's one thing out of the way. The other set of earnings, Nirav, that I thought were kind of stand out was LTI Mindtree, large cap Nifty name. It was a miss on almost all counts. The stock still trades about 27, 28 times. Fundamentally, for a business which has pushed out its growth and margins to FY26 at the very least, right, in such a fluid environment, would you pay 28 times, or would you believe that it deserves a lower multiple? Can LTI Mindtree correct today, and what are the multiples that you would give it?
Definitely, if one were to look from a valuation perspective, I think it looks slightly expensive. If one were to take into account the fact that the large cap names have also been trading in and around that valuation, or even at lower valuations for that matter. So I think I would wait for some time for some better valuations. I think there is a possibility of getting a bargain over there as far as the stock is concerned. But fundamentally, yes, it's a good call. But from a valuation perspective, there is a possibility of a bargain, considering the fact that IT stocks have been under the pressure. We've seen whether it is TCS or whether it is Infosys or whether it is Wipro, whether it is the likes of Tata Elxsi, Persistent System, most of these stocks have come under pressure post the announcement of results. So I think one can wait for a bargain.
All right, Shivangi Sharda is also with us today of MOFSL. Shivangi, great to have you on the show. Very good morning to you. Kotak Mahindra Bank, Axis, Vodafone, three stocks that we will see maybe very interesting moves on, opening trade. What would be your call on all three of these? Before I, of course, come to indices, picks, etc., let's start with these three.
Very good morning. Thank you for having me. So we have seen that, Nifty and Bank Nifty is backed by a lot of action from the bulls. And of course, these three heavyweights will be in quite a lot of action, especially after we've seen that HDFC Bank has also, seen that action. Among the three, I would say Axis is the most preferred pick over here because it is quite, sustainable. Although, Kotak is known for its wild swings, but then again, we are seeing that, it needs to hold above 1850 zones for these for this leg of rally to continue. So the safest would be Axis Bank over here, which is now getting ready to cross its 50 daily exponential moving average. And we've seen that RSI is also showing signs of positive divergence over here. So this is one stock which is on radar, and we are looking at 1100 levels as an immediate level. Now, apart from this, PSU is also looking quite attractive in this space.
Right. Well, that's looking attractive in this place, in this space. Well, of course, the markets itself are not expected to see a very, very sharp up move. Shivangi, on the index, today is expiry, and it's been okay, to say the least, but for some reason, global cues aren't too strong, and the markets were showing some signs of tiredness yesterday. What would be the trade on the index and on Bank Nifty? Bank Nifty, in fact, has had a pretty good run for the last 4 days.
So, as far as the index is concerned, we are trading above its, weekly weighted average levels. And also today's monthly expiry, we are slightly near about its, monthly VWAP, which indicates that overall positive bias should be intact in the market with some sort of an upside gap, because we have seen that India VIX has dropped to record low levels. So this will, create some sort of a squeeze in the option premiums as well. So, which is being seen from the last 2 days. So, of course, we are looking at the positive bias, and we would recommend to buy on any small decline. Now, talking about the levels, immediately we are looking at 22,550 zones and 22,222 as a crucial support zone. These two levels would be important to watch out for. Now, put call ratio is above 1, which is quite comfortable for the bull. So over and above, we are expecting a positive stance for the index for the expiry day.
What about top picks, Shivangi? What's on your radar this morning?
So first on my radar is Concor. We have seen that the stock is now getting ready for a good move. A good amount of volumes are being added over here. And this entire space is in a lot of action and buzz. And a good amount of rollover is also being seen adding over here as we are, approaching the monthly expiry. So recommending a buy here. The targets are 1,010 levels over here on an immediate basis and 950 as a crucial support zone. Now, the second pick on my radar is HAL, in the entire defense space in action, and we have seen that the momentum is intact after the consolidation breakout in this stock. After 17 weeks of consistently moving in an upward sloping channel, this stock is now showing good signs of buying over here at these levels as well. So recommending a buy here. Now, interestingly, 22% open interest addition have been seen in the long side with the price surge, which indicates that this positiveness is going to continue for the next series as well. Now, 4,100 is the next targets which we are looking at here, 38.70 as a stop loss.
Okay. Shivangi, a lot of stocks which were active in trade yesterday, I wonder how the momentum appears. So you've spoken about HAL, I presume, but yesterday some of the shipbuilding stocks, Garden Reach Shipbuilders, Cochin Shipyard, etc., had a very strong run in trade. Do any of them look interesting either on the charts or the derivative positions?
Absolutely. We talk about GRSE or Cochin Ship. Both these stocks have shown, massive follow-up after the breakout. And, on the technical side, if we, look at both the stocks or entire stocks in this space, Cochin is one stock which is quite reliable, because in the previous times we've seen that after the breakout, this is one stock which continues its rally. So this is one stock which is on radar. And also there have been impressive volumes from the last 2 days, which will ensure that the upside is, continue to intact. So 1325 would be the immediate level to watch out for in this stock, with a support of 1250 zones.
Okay. Well, so some interesting names there on a day when we'll start off lower, so keep that in mind. Vodafone also will be a stock in focus, and we'll talk about that too. But before that, let me get in Harsh, who joins in with One interesting brokerage note, or maybe a couple of interesting brokerage notes for this morning. Harsh, what have you picked up?
Well, yes, good morning, Niraj. I'm going to focus in on Kotak today and what brokerages are suggesting on that stock, because that's one counter which is seeing some amount of interest, especially from the investor community. Of course, the embargo itself, and I'll talk about Citi first off. They maintain their neutral rating, no change in target price from Citi, but they have some interesting observations. First off, they are suggesting that 95% of the PL loans, 99% of some of the other unsecured loans, and 79% of the buy now pay later loans were disbursed digitally. Now, this is roughly 5% of Kotak Mahindra Bank's portfolio. 3.7% of the portfolio is the credit card portfolio. So in all, that comprises 8.7% of the total portfolio of Kotak Mahindra Bank. 11.6% of the portfolio is unsecured loans. This piece was expected to become 15%. So it was supposed to grow at an accelerated pace. Something like 30+% plus is the kind of growth rate that has been clocking on a regular basis, on a low base, of course. So that, according to Citi, will impact the growth numbers for Kotak going forward till this issue is resolved. So that's one piece to keep in mind. The other one is, because this is unsecured, it's a higher margin business and therefore is a more profitable business. And that will also impact profitability going forward. Citi is expecting a 2% odd knock. Now, just in addition to this, Citi is also suggesting that 90% of new investment and 70% of FD and RD accounts were opened digitally. So another drag will be on the deposit side of things. Keep that in mind as well, because that will also have a knock-on effect on loan growth outside of the unsecured loan growth, which will get impacted. So all of that will have a knock-on effect on Kotak Mahindra Bank. Now, quickly on to the next one. Jefferies has maintained its hold on Kotak Mahindra Bank. Target price is 1970. They've lowered it by around 80 rupees from 2050 earlier. They're suggesting that this will take around 9 to 15 months to clear, and they've trimmed their earnings estimates by again 1 to 2%. So some amount of negative sentiment, but nothing major that brokerages are doing on Kotak, at least at the moment. These are the two meaningful ones. Of course, Investec maintaining its numbers, and there are some other brokerages which have maintained their target prices, not changed it, and maintained their ratings as well.
Harsh there, and talking about Kotak Mahindra Bank, that's the big one. Now, Nirav, you gave your view on Kotak Mahindra Bank. Let's hear, what you have to say about Axis. The street pretty perhaps will be excited. Brokerages are also bullish on the fact that their margins have improved 5 pips Q on Q. That was unexpected, all things considered, and in contrast with what's happening with Kotak, perhaps Axis looking even better today?
Yes, definitely, because I think the biggest challenge for this banking industry has been the deposit mobilization. And I think that if one were to look at the figures of Axis Bank, that has started improving in a substantial way. And we've seen the CASA ratio, which is quite well ahead of the industry. So I think the core operating income has also gone up. We've seen an improvement in the net interest margins. So I think all these factors augur well as far as Axis Bank is concerned, and I think it's on the comeback trail. So I think definitely this stock is poised to get re-rated in the near term.
All right. We'll take a very short break, but we're coming back with the pre-open rates. We'll also get our experts' views on Vodafone that FPO will list today. Essentially, you've seen all the top bosses. You've seen Dinesh Khara and Kumar Mangalam Birla talk about it as well. Is it a buy at this point at all? All of that coming up after the break.
Welcome back. You're watching India Market Open. It's expected to be a muted start for the street. A little bit of weakness is what we're expecting. It was a little bit of a struggle as well towards closing, where markets were struggling to hold on to their gains. This morning, a 50-point cut is what we should be expecting. Nirav, I'll come to you with some of these election play names. So all your fertilizer names have ran up quite sharply. Defense, every single day, shipbuilding, defense is up anywhere in the range of 5 to 10%. I mean, some of these guys are up 30 to 40% in the last 3 to 4 weeks itself. Is there any opportunity left for a further upside on these counters over the next 6 weeks?
So, of course, from what we have analyzed, I think we've seen a strong momentum in 4 sectors: power, metals, defense, and realty. And I think all these sectors are expected to perform better as we see the earnings come through. That is one factor. And yesterday, as you rightly said, that metals was in the limelight, and we've seen fertilizer stocks also move ahead of the election season. So I think these are broadly going to be the sectors to watch out for, because we've seen large cap names and nothing has really come out as far as the early birds results have been announced. So I think the focus is now on sector specific and stocks, and the sectors which we discussed, like power, metals, defense, and reality. These are the sectors to watch out for.
Right, Shivani, on the charts, how does some of these fertilizer or defense names look? HAL, BDL, BEL also yesterday have all done exceptionally well. Garden Reach, Mazgaon Docks, Cochin Shipyard. I don't know what's not done well here. And if you can share your top pick with me in the defense pack for the May series.
So absolutely, these stocks have been in action, and we've seen that they have, some of them are touching their lifetime high levels as well. And, there has been a massive consolidation breakout. So the stock, looks for a good potential upside from these levels as well. So on my radar is definitely HAL and BDL. HAL, the one which we discussed recently. And BDL is something which is also quite attractive at these levels, because we have seen that the stock is respecting its key exponential moving averages. And after, 3 months of roundabout moving in a, narrow range, the stock is now coming out and, showing good signs of buying over here at these levels. So recommending a buy here. Now the targets for the May series that we are looking at, it will be 2200 zones with a stop near 1980 level.
So on BDL at current prices, Shivani's got a buy call, 2200 for the May series is what she's expecting. Of course, the pre-open is all over the place. But very quickly, Shivani, also on fertilizer, I know Chambal on the charts was going through quite a breakout, at least yesterday. And so was Deepak Fertilizers. Anything across the fertilizer universe that again looks good for the next series?
So looking at the fertilizer space, Deepak Fertilizer is one stock which has come out of its long underperformance zone. But definitely Chambal is better placed over here, as, in the recent past, it's shown that this is, more sustainable and reliable over here. Now, there was a cluster zone of near about, 380 odd levels, which the stock has surpassed. And, this price volume surge is going to take the stock higher. So this is one stock on radar for 425 odd levels, and 390 would be a crucial support. So looking to buy this stock, but at a slight dip.
Right, first pre-open rates are in with, of course, the caveat that these are not the rates that you should track. It's just showing initial sentiment, perhaps. Having said that, Kotak Mahindra Bank 10% down as soon as pre-open has hit. The impact sentimentally, or whichever way you take it, of the RBI action is definitely showing in the stock. So that's opened on a very, very weak wicket. We'll see if it stabilizes over the next few minutes. LTI, Mindtree, we were talking about disappointing set of numbers overall, high valuations, and that stock nearly 4.5%, 5% down. I just want to pull up HUL as well and look at where all the big numbers are reacting. That's 1.5% down. Axis, let's just see what Axis is doing. Is it, doing that balancing act? Not quite enough to balance out Kotak right now, but yes, it's about 2% up on Axis. So these are the very, very initial sort of rates you're seeing. Tata Consumer improving its lot after a day of drubbing post its results. Very initial rates coming in. But meanwhile, a bullish call coming in from UBS on Godrej Consumer. Puneet is joining in to tell us why.
Yeah, that's right, Tamanna. So amongst the slew of brokerages on earnings and corporate updates, we've taken this particular very interesting report. They have a UBS has a buy call on Godrej Consumers with a target price of 1,450 rupees, which is a 23% upside from the current levels. Now they've seen that the anti-mosquito stick market, which is and they expect that the market share of this will expand to roughly 35% by financial year 2028. They also see that the home insecticide business will be a key beneficiary of exclusive rights to an RNF molecule, which the company has until 2032. They see that within that they're expecting roughly 4 to 8% additional sales growth in this particular segment, while they're expecting electric insecticides market share gain of roughly 400 basis points for the company. Finally, on the other segments, they see that roughly 9 to 19% revenue CAGR on as well as EPS CAGR on the household insecticide segment between FY23 and 26, while they're seeing the liquid detergent market to provide large sales growth of an opportunity of roughly 30% between FY24 to 28. So they are expecting these rich valuations to sustain for the company on higher sales growth as well as margin expansions, and is having a roughly PE of roughly 50 times to get to this particular target price. Back to you.
Okay, Puneet, thanks a lot for that. And it's interesting because we see what HUL has delivered or spoken about in commentary. We see what Tata Consumer has done, and here's UBS bullish on Godrej Consumer products. So maybe a mild uptick currently. Let's wait and watch what happens here. Shivangi, firstly on the charts, the FMCG players, Tata Consumer had a big fall yesterday. HUL might react a bit today as well, and GCPL is starting off okay. How do they look on the charts of the derivative positions?
Now, looking at the entire consumption space, there hasn't been much of action over here. And in fact, this entire series has also been, some sort of a lackluster. Of course, it did try to, show some signs of strength and buying. But then again, we have seen that it did not hold at the higher zones. So consumption is not, particularly on the radar. But of course, some of the power and, related stocks are on the cards. Like Voltas is one stock which is held on quite well. So these kind of stocks or this sector would be on radar.
Okay, Nirav, any thoughts on Godrej Consumer and the argument that UBS is making?
Yes, definitely. If one were to look at the quarterly updates also, which the company had released, I think one of the best quarterly updates which had come in from the FMCG companies was Godrej Consumer Products. So they've been quite upbeat about the product profile, the margins. And one has to remember that this is a company which has a presence in many geographies. So their presence is there across different continents. So the performance is naturally going to be quite different from what is there, from what we have the domestic FMCG players. So in a way, I think it's a different kind of a trajectory, and it could work out to their advantage, at least for the time being.
Right. It's not looking good for Vodafone Idea. As initially anticipated, a 10% fall yesterday, another 9% cut in pre-open trade. We'll visit this in a few minutes, but 1180 is what we're expected to see as the listing takes place shortly. Remember, it was well subscribed, but the retail participation was dimmer, which means that there could be some dumping of this counter in opening itself.
Also out of the F&O ban today.
And it's out of the F&O ban, which is actually not good for Vodafone. Nirav, I want to move away from Vodafone and ask you about a stock that caught my attention, and I think caught everybody's, was Tejas Networks. Yeah, sure, great story, great turnaround, numbers were fantastic, but the stock is up 50% in less than 3 days. I mean, where is the rationality? Were the numbers really that good that it's gone up by 50%? And if yes, is it still an opportunity?
So in the case of Tejas Networks, it's a story of strong performance plus a very strong expectation going forward, because the order book is around 8,800 crores. And what this company has done is that they have ramped up their workforce. They have ramped up their R&D team, etc. So I think the company is geared up for the future. They are trying to meet the future requirements. But I think I would be skeptical on one account is the working capital requirements, because their debtor days, their inventory, etc., have piled up significantly. So I think the company will have to get its working capital and its house in order as far as these issues are concerned. But no doubt, it's a very expensive stock. But then the order book is also quite strong. So I think going forward, we should see numbers improve significantly as execution picks up.
Well, pre-open rates having settled, let's get the usual suspects just going for a moment. So Kotak, Vodafone, Axis, LTI Mindtree. Kotak Bank 9.6% down. Is this the end of it? That's the key question. Vodafone 10% out of the F&O ban, we'll see selling. LTI Mindtree 1.5%, nothing dramatic but down 1.5%. And Axis Bank 3% higher. Well, Axis doesn't quite negate entirely Kotak, but a third of what Kotak has left out on the Bank Nifty or will have an impact on the Bank Nifty, Axis is. There are others too, by the way, 5 Paisa or OFSS, both of which could be interesting. 5 Paisa capital is down 10% on that higher cost, and Oracle Financial down 3%. Nirav, very quickly on Oracle Financial. Now, after a very strong Q3, quarter on quarter, Q4 will look bad. Can it bounce back, and would you use this weakness to buy into OFSS?
Well, I think the stock definitely had a very strong run, and after that we are seeing this. And I think any correction in this stock can be used as an opportunity, considering the fact that they have a very strong product pedigree. And I think I'll definitely look at it as at every fall one can accumulate in small quantity.
Right, that's Oracle Financial. Let's pull up LTI Mindtree and see how that one's also doing in pre-open trade. Numbers was okay, good, not too bad. About 1% odd. It's not looking like it's coming off a tangent. HUL as well, that one reported numbers. Nestle will report numbers earlier in the day. HUL as well indicating or expected to see a flat start from the way we look at it. Apart from that, you've got Kotak also still trading with the 10% cut. Spark continues to look bad. We'll of course talk about all that very shortly. But Shivani, you want to come in on Nuvama? The stock was looking very good in yesterday's trade and has had a good run over the last few days as well. Constructive on Nuvama at these levels, or it's a miss now if you're looking to go long?
Now, of course, looking at this stock, we have seen that there has been a lot of action. But then, there are, better stocks in this space itself which are, on radar. And also we should focus on the, better stocks that are in action.
Right. Nirav, what about you? Anything in the capital market space? I know we've talked about this often, but the fact remains that the buying still persists across the Nuvama and Angel One, 361 WAM. We saw those numbers; they were fantastic, to say the least. Are you buying the space? I mean, I don't even know what the valuations anymore justify the kind of numbers these stocks are trading at.
No, we've not been buying into these stocks because somehow we've missed the rally at every point. So I think it's kind of futile trying to play catch up at this point of time.
All right, last pre-open calls from Shivani on what you would want to bet on today. Anything in the financials that you would pick up?
So definitely in this entire financial space, SBI is one stock which is on the radar. We've seen that Bank Nifty is quite a lot supporting, and there is a lot of action from the PSU space itself. Now, the most attractive for SBI is that good rollovers are being added over here. And we've seen that, week on week, we've seen that there has been gradual longs that have been added over here. Now the stock has recently, retraced at its crucial level and now showing again, good signs of movement. So we are looking at this for 820 odd levels.
So SBI is a buy right now. Shivangi says. Shivangi, can we just look at what you would do with counters like, say, Jubilant, Pharmova, Dalmia, Bharat, some of those also in news today and down in pre-open sessions. Anything that's a buy here?
See, the sector in action would definitely be cement space. So ACC is on the radar, and I think we should be, with the best of the lot. Even Grasim, for that matter, is quite positive, and one can look out for that.
Okay. So Grasim one would look out for as well. Nirav, would you look at, opportunities to buy for a Vodafone today? It's looking like it'll list lower. And anything else in the telecom space? Telecom space overall has already moved up, waiting for those possible tariff hikes post-election. What would be your order of preference if I looked at a Bharti Airtel, a Vodafone and an Indus?
So I would stay away from Voda Idea, and I think, but what has happened is that this FPO, which has been oversubscribed by around 7 times, has worked out to the industry's advantage. I think it's given a fresh lease of life to the other stocks, because if one were to look at the implications of this oversubscription, we will see that it's had a positive impact on Indus Towers. It's had a very positive impact on the AB Birla Group as such, because Grasim had an overhang of funding this company, etc. So I think Grasim has also moved up if one were to look at it from that angle. And we've seen very good performances from Jio platforms also, and Bharti Airtel. So I think in order of preference, of course, I would the highest order would be Bharti Airtel. And of course, we like the Jio platform story also very much, and would stay away from Voda Idea.
Okay, I would stay away from Vodafone Idea is what Nirav Ashar is saying. Remember, there are equal measure of people who put in large sums of money to work out there too. So interesting to see how this shapes up over the course of the next few quarters, if you will. But Shivangi, stay on. We'll need to take in one top opening comment from you as well post-market open. But the market's likely to start off slightly sluggish, courtesy Kotak Bank predominantly. But even some of the others like LTI, Mindtree and HUL aren't quite setting the stage on fire. But here come the first trades. This Thursday morning, about 1/3%, nothing too dramatic, but 1/3% in the red. Bring up the bank Nifty, that would be sulking courtesy Kotak, about 1/3%. Again, nothing dramatic again. So some of the stocks like Axis and others might be giving some support. Mid caps flat, in fact moving into the green, small caps in the green, but flattish essentially. Let's get the heat map, and we know what stocks will be down here. So there is Kotak Bank, which is down 9. There is HUL and LTI Mindtree, which are down about 1.5%. Tata Consumer continues to sulk after yesterday's performance. And today, Bharti, second in a trot now, is seeing a bit of a pullback yet again. But, after such a stellar rally that it has had, you would expect that this is what will happen to an Airtel. So that's one key thing. Equal number, even Stevens of the advanced decline, maybe a slight more number of declines as opposed to advances. What's done well? Actually, only Axis worth mentioning, about 3%. iShares is flattish. Remember the big brokerage call yesterday as well on iShares, but about 0.75%. Some strength for Hero MotoCorp and HDFC Bank marginally in the green. So I think Axis, HDFC Bank, maybe ICICI Bank is not in the red. That could be helping, but it's essentially Axis Bank with a 3% uptick, which is taking the cake. And Kotak is down, but LTI Mindtree too, about a couple of percentage points lower. So not surprising the reactions that we're seeing. It's just very interesting. Tamanna, the Tata Consumer continues to sulk. 5% yesterday, another % today.
Yeah, absolutely. It's a tale of two banks this morning. Kotak on one end and Axis on the other. Axis with better than expected margin expansion, and Kotak, of course, with that RBI blow. But let's talk about some of the other stocks in the broader markets that are responding this morning. And we'll just pull up the indices also very quickly. Look at what's happening with the mid cap and the small cap. Definitely weakness on the front line. And no great shakes here either. Just marginal marginally somehow in the green. So it is a day of weakness. I would say compared to the implied Nifty, not that bad, at least so far. Let's pull up Vodafone. Vodafone is the other big story this morning. Of course, apart from a Kotak, the FPO has listed. We've had a lot of guidance and forward-looking statements from the management, etc. About 2% down, so not too bad compared to how it got hammered yesterday. But we'll have to wait and see how Vodafone really settles, and is it something that you'd want to accumulate at this price of 12.90. Remember, the FPO was at 11 rupees. Indian Hotels is the other one that we should look at. The numbers were okay, but they've missed Bloomberg estimates. About 1.5% down on Indian Hotels in the opening session. Dalmia Bharat, again, a lot of action on numbers. It's either numbers or then, you have something like a Kotak, which is because of news. But Dalmia Bharat on numbers is doing okay. Actually, the numbers were quite disappointing. Mass Financial also, numbers were good. That's why it's positive. I want to look at Macrotech and what's happening with Macrotech this morning. Profits were down, but overall their guidance for pre-sales was just superb. The numbers are okay. The stock is about 1% up right now. Jubilant Pharmova is the other one, which was on the radar because there was a US FDA inspection of their Canada facility, and that had about 5 observations, but the stock not responding too negatively this morning. So an okay sort of a start of the day, and it's all about Kotak and Axis this morning, isn't it, Samina?
Are looking quite weak in trade this morning. In fact, Kotak is your biggest loser. We've already highlighted that enough. Down about 10% and no surprises there. It's Spark again down 5%. If you can just pull up Spark and see what it's done over the last 10-12 days, I'm guessing it's probably half of what it used to be about a month ago. The stock trades the cut of 5%. Real estate is seeing some profit taking. Indian Hotels numbers maybe is down about 2.5%. LTI Mindtree is not taking it too badly this morning. It's down, but it's not taking on its chin, about 1.7% off on LTI Mindtree. Apart from that, you've got Aavas Financiers, again, earnings related, 1.5% cut there. Dalmia Bharat is seeing some weakness, Mankind Pharma. So it's a mixed bag in terms of cuts this morning. In terms of winners, Bharat Forge is up 4.5%. Steelite is up 5%. Axis is enjoying its day in the sun. Good earnings. The stock gets a thumbs up to 4% higher as we see it. Sugar stocks continue to do well. So Sri Renuka is up 3.5%. You've also got Z Entertainment that's up 2.5%. It's in the band, but not looking too bad. Railway counters continue to see some buying. So the likes of a Jupiter Wagon are up 2.5%. You've got Sterling and Wilson that's up 2.5%. Let's take a look at Tejas, only because the rally has been so sharp on this one. It'd be interesting, still not doing too badly. So there's been no profit taking emerging on Tejas Network. Vodafone Idea, if we can get that one up and see what it's getting up to. It was supposed to open weak. It's opened flat to lower, not the kind of losses that we'd expected it to see. But still, with the 1% cut on Vodafone Idea is what we have. Along with that, you have Macrotech. I do think Tamanna has highlighted a bunch of these stocks, but nevertheless marginally higher. So you're not getting a runaway gain in most of those earnings related counters. It's muted with a little bit of a downtick or a downward bias, at least in early minutes of trade. A quick check on BDL and HAL and BL and Paras and Coach and Shipyard. Those have been the flavor of the markets. They're trading flat this morning. So opportunistic Bharat Forge is the stock of the morning. Opportunistic investment is what you might see investors or traders coming in with at some point. We've highlighted most of those counters. Sign DLM again, that was a big gainer yesterday on back of strong numbers. This morning, finding its peace, trading flat. So it's okay. The market.
I like the line, finding its peace.
Yeah, it's all doing okay. There isn't very, very sharp moves on either front, and I think this is not something we should complain about. A little bit of a pause is always good.
It's Kotak, really. Kotak taking the piece of action, really.
Well deserved.
10%. Huh?
Story of the morning.
Story of the week, really. I mean, you could argue Kotak Bank is the story of the week.
I think story of the week is RBI and what you constantly see with the RBI coming in with action. Pranav Gundlapalli is with us, Senior Research Analyst at Bernstein, and let's very quickly get his take on Kotak Mahindra Bank. As expected, a weak start for Kotak and the street punishing what the RBI action has done. Pranav, just a couple of things. Of course, you'll talk about the impact on revenues of the bank if you can't onboard customers digitally. I think that's a bigger hit even than the fresh credit card issue stop. I just want to understand reputationally, how do you have an IT problem for 2 years that you can't fix, even as you're onboarding customers at this frenetic pace?
Hey, morning. See, I think RBI's action in a way is just getting the bank to focus more on fixing these issues. And I think the problem, partly at least, lies in what you said. When you have growth at this pace, it often, the IT security and IT infrastructure probably falls down in terms of pecking order for the banks. And therefore, this action is more a way of forcing these banks to focus on the more critical issues rather than get diverted by catering to the growth requirements.
What is the quantum of impact you expect on Kotak Mahindra Bank, on their financials from this action?
I think it would be early to estimate the exact impact until we get some more clarity on what exactly is the true digital sourcing for this bank, right? Because if you go by the numbers that they put out in the presentation and take it at face value, then it would seem like a large part of new customer acquisition is going to be stalled. I mean, that could pretty much wipe out growth until this ban remains. But what you've seen in reality is that a lot of these are, based on stretched definitions of what I would call digitally sourced customers. So in that case, they could be replaced with, say, telecallers or some of the other channels which are still permitted. So I think it would be early to put down a number on the final impact, but it would be significant because this is unlike, say, HDFC, which had a similar action a few years ago. This is across product segments. So this is not just for credit cards. Well, credit cards is a complete product ban. Banning acquisition of all products through online and mobile channels does lead to a big impact on the growth for this bank.
Have you downgraded the stock after what happened last evening?
We would wait to hear more because I think the initial reaction is, obviously expected. We haven't downgraded yet.
Okay. Pranav, the question, good morning, Niraj here. The question that might come to mind is because Kotak trades at about 2 times price to book, give or take, maybe now it trades slightly cheaper at 1.8 or what have you. Is this the extent of the multiple derating that the bank would see in these circumstances, or do you believe it could trade at cheaper multiples?
Yeah, I think the issue is that this was not a bank that, see, even before these digital issues came in, I think there were other issues which was primarily on deposit growth. Which I think the biggest complaint for investors looking at this bank was that the deposit growth remains weak and has lagged peers. And with this restriction on new acquisition, that problem gets even more acute. So yes, it gets a lot cheaper, but once these problems go away, you still are going to look at a bank which has been struggling with its deposit growth. So it's not just this. There are other issues to deal with. So yes, it gets cheaper, but the story doesn't change a lot even when these bans get lifted.
So I'm just trying to understand, Pranav. So therefore, would you give it a multiple of 1.8, 1.7, 1.6? I'm just trying to understand where it may not bounce back, I buy your point, but where is it that the multiples could settle for Kotak Bank?
See, I think that assuming before this, the multiples were fair and reflected the expectations ahead. If all this means is, let's say, it takes about 15 to 18 months for this to come back, and growth is halted for that period, then you just, adjust it for a year and a half of lost growth. And that would translate to almost 20% plus impact to the multiple.
Right. Pranav, I know you track HDFC Bank also very closely. We've talked about it extensively in the past. Now, let's look at it. Kotak is clearly going to lose market share. Deposit growth has been a big problem for them. And this, for the next at least for the next year, is going to be tough for Kotak. Do you feel like Kotak's loss could be HDFC's gain? Is it a feather in their hat? And while you may consider re-rating Kotak, this might even help HDFC getting re-rated upward. Or that's being a little far-fetched?
I think it's far-fetched because it's small. At the end of the day, I think we need to remember that this is probably about a 2% market share bank. So, HDFC and ICICI are significantly larger. And therefore, this might not really help them a lot, number one. And number two, also remember that while digital channels have been important for acquisition from a number of customers' perspective, surely from an amount of deposits or the value of deposits, it's not the biggest channel, right? So even for Kotak itself, the average SAR balances of 811 customers remain significantly below that of their normal banking channel customers. So, on a volume terms, yes, they could see a big impact, but does it translate to deposit growth and especially in improvement for HDFC, ICICI? And that will be marginal at best.
Okay. Pranav, the other question, of course, is non-Kotak, and there have been some releases. We've seen HDFC Bank, we've seen Axis. I don't know what all you have coverage and clearance for, but I'm just trying my hand here. What did you make of some of those numbers, particularly Axis, which is red hot post yesterday's release?
Yeah, I think going into the quarter, the big concern was on a potential NIM compression because all the discussion was around tight liquidity, increasing deposit prices, potential margin compression. I think what we have seen in the few numbers that have come out so far, HDFC Axis included, is that the margins actually have held up quite well. So and secondly, the deposit growth has been quite fantastic. Now, it might be a one-off, seasonal, etc., but that plus NIM staying reasonably healthy, I think has led to a positive read across the entire sector. Saving Kotak. So I think that's the big relief, I would say, that we have seen in the quarter so far. And this has been especially positive for the smaller banks, which were under pressure on both the LDR front as well as cost of funds side. So I think, therefore, it's almost a relief for the sector overall.
Pranav, in that case, we're already seeing a 3.5-4% uptake on Axis Bank. While the numbers were very impressive, some of the brokerages, of course, have come out and upgraded the stock. What is your target price on Axis Bank?
Yeah, I think we still see a healthy upside there. And to us, the quality of deposits improving is the biggest, positive. I think the next leg for us is just to see when they catch up with, say, an ICICI and to a certain extent HDFC on the deposit growth. So I think that's the last missing piece. So if they can deliver a few quarters with both the quality and quantity of deposits in place, I think that's where, that gap really closes. Otherwise, there's still a gap versus, the larger peers. I think that's the next step that remains. And what they've done really well is, of course, maintain their ROEs and which thanks to their optimal capital ratios, I think that's really helped them, so far.
That's true. Pranav, the larger story of, at least at the start of 2024, was that rate cuts will come in that will lead to whatever changes in NIMs that they lead to for banks as well. And now that story gets challenged a little bit in the mind, if not actually, till the end of this calendar year at least. Does that in any way alter whatever thesis you may have had earlier on banks versus what you may have now? Earnings notwithstanding.
Yes. So I think two things, right? So the impact of a rate cut was always going to be marginal because I think even at the start of the year, the expectation was for a shallow rate cut, 25, 50 basis points for the next 12 to 15 months. So I think the rate cut coming in was the secondary risk. The primary risk was the margin compression as the deposit repricing happens. I think now with this, improvement in deposit growth, I think that's the bigger risk, which is starting to look less likely to play out. The rate cut, I think, just helps them keep their margins intact for a bit longer. But even when that comes in, the impact could be quite limited. So you're talking about less than probably 5 basis points. Even if you have a 25 basis points cut on rates, you might see a less than 5 basis points this year. So might not be a big factor as such.
Pranav, your top 3 picks from the banking pack across the financials actually. So the likes of a Paytm still included in that list.
I would keep the two separate. I think for the larger banks, it would be HDFC, Axis, and then ICICI. We strongly prefer the private sector over the public sector banks. We believe that the earnings growth for the private sector banks will once again come out to be superior to the public sector banks after a 2.5 years gap. So that's our preference. On the payment side, Paytm I think is still cheap. If the regulatory uncertainty lifts, I think what we need to see is the regulatory action seems to be done. We need to wait and see where the full impact of all these actions, the loss of wallet, the shift to the third party, the other banks for payments, the entire net impact of that is still uncertain. So I think once there is clarity there, we could see some upside, but remember, it's not the same type of risk or returns as you would see with banks. So I would almost classify it in a very different bucket altogether.
Okay. Pranav, you track banks closely. Do you also cover non-lending financials by any chance?
Yes, I do look at them. I don't track them, cover them officially.
Okay. But if you just have a broad view, and if you do, again, it's okay if you don't, please tell us so. But if you broadly do, the capital market plays in the non-lending pocket, is that something that is looking attractive from, let's say, a longer term perspective? There has been a sharp rally out there. People are penciling in multiple years of growth. Do you second that?
See, I think, so there are two parts to it. So the longer term, I think there is clearly the space is attractive and would have multiple winners, and therefore there is this optimism which is set in. That is one on the longer term. I think the shorter term, from my conversations, a bit more interesting because there is an expectations of an earnings reset for the banking space because the NIMs are higher, so everybody expects a rate cut, some repricing. So if you look at the consensus estimates for next year, the EPS growth is quite moderate across banks, whereas for some of these capital market players and the non-lenders, those expectations are a lot healthier. So even from a short-term perspective, there is therefore some interest to look at non-banks. So that's something we hear across conversations, but don't look at the individual names to make a strong comment there.
Right. Thanks, Pranav. It's always good having you on the show. Your perspective is much appreciated and valued for us and our viewers. In the meantime, the markets are trading largely flat. It is Kotak that's taking the cake this morning, down 10%. HUL reported numbers, LTI reported numbers. Those stocks are also seeing a little bit of movement, but nothing as compared to the cuts that we're seeing on Kotak. LTI is down marginally, down about 2%. You've also got a little bit of a cut coming in on, if you can get HUL up, that should be helpful. Along with that, Vodafone Idea has also reversed some of its morning losses. The stock had opened down at the 2% cut, now trading fairly flat. We'll take a break. We'll come back following a successful 18,000 crore rupees FPO listing. What is the road ahead for Vodafone Idea? Here's what Kumar Mangalam Balla had to say.
I think the big one now is to spend the money on capex. The three big parts of that is to increase the size of the network. The second is to densify the network in areas that we are present. And third, of course, is implementing 5G selectively across the network. So that's a task cut out for us. I think that we're very happy. This is a new life for Vodafone Idea. And we look forward to being an outstanding service provider to our customers.
The power of India lies in the strength of its people. Our forefathers fought for every individual to have a voice and to use that voice to shape the future of our country. So voting day is not a holiday from work. It is a day we must answer our call to duty as citizens of India. I, Ajay Bijli, pledge to encourage my entire team at PVR Inox, their families and friends, and the larger business community to vote, because this is the true power of Indian democracy.
Right, pleasure is mine to bring on board Mr. P.N. Vasudevan to, for a conversation around the Q4 numbers of Equitas Small Finance Bank. Good morning, Mr. Vasudevan. Welcome to NDTV Profit.
Good morning.
So, sir, just want to try and understand with regard to what's happening on the margin front. Your yields, when I'm looking at it, not going up significantly, in fact, staying pretty much flat. Cost of funds continues to rise. Margins, would you say, have now bottomed?
Yeah. So if you see our disbursement yield, it's actually gone up by almost 1% in FY24 compared to FY23. And if you see the disbursement yield between the third and the fourth quarter, it's remaining steady at about 18.75%. The disbursement yield is steady between the third and the fourth quarter. Now, if you come down to the yield on gross advances, when I say gross advance, I'm kind of taking in the Securities book also. When you look at the gross advances book, the yield for the fourth quarter compared to the third quarter has come down by about nearly 9 to 10 basis points. And if you look at my interest cost, that's actually gone up by a similar 8 to 9% basis points between the third and the fourth quarter. So that's the reason why you see the NIM also dropping between the third and the fourth quarter. The fourth quarter NIM was about 8.16%. That's the exit NIM that we had for the fourth quarter. The other impact on the NIM, of course, we all know is the CD ratio. And, we had a 100% CD ratio in the beginning of FY24. And by end of FY24, we actually managed to bring it down all the way to about 87%. So there's a lot of work that we did on the CD ratio, which is basically that we raised extra deposits and put it into investments to help improve the CD ratio. But of course, that has a collateral impact on the NIMs. So going forward, the question you asked in terms of whether the NIM has got bottomed out, I would say that, the CD ratio, we still want to bring it down to about 85% by March 25, which is another 2% that we want to reduce over the next 12 months. So it may not have a dramatic impact on NIM any longer. And in terms of our interest cost of funds, we know it's 7.44 as of March 24. And we expect that most of our old deposits have got matured and repriced at the new rates. We still have a little bit of old deposits which are left to be maturing and repricing. So we expect another about 10 basis points increase in our cost of funds over the next 1 to 2 quarters. That should play out. But in terms of our yield on advances, because we have been improving our yield on the disbursement, and there is a lag time before it gets reflected on the advances. So we expect a little bit of the advance yield to start moving up because of the lag impact of our disbursement on yield, yield on disbursement. So a combination of all three put together, CD ratio, not much of change required any longer. Interest cost going up marginally by 10 basis over the next 2 quarters. and the fact that our yield on advances will have a lag effect, positive lag effect. I think on a combination basis, we expect that our NIM should remain reasonably steady. We are at 8.16, so I think it will be between 8.1 to 8.15 for the rest of the year.
Excellent. That's extremely comprehensive. Thank you so much. I want to try and understand a sustainability of the deposit growth, because a 43% is extremely strong. You've obviously showed up on that deposit base in FY24. How does it go in FY25 on a higher base?
So last year, we had to raise a higher level of deposit because that's the way we could decrease our CD ratio. But that is not a major requirement going forward. We should be looking at about a 25% growth in advances for FY25. And to support a 25% growth, we need a deposit growth of anywhere in the range of 32 to 34%, which will help take care of the SLR CRR requirements and keep the CD ratio steady. So somewhere around 32, 33% deposit growth is what we would be looking for in FY25.
Sure. Thank you for that. I want to try and understand what is happening on the loan mix front. 25% growth that you are guiding for in FY24. Does the mix change in any way, and what part of your book is unsecured? If you can just give us that metric.
So currently microfinance is our only unsecured book, and that contributes about 18% of the assets, advances, and balance 82% are secured loans. We have a board-approved long-term strategy, as part of which we have pegged or capped the unsecured portion of the bank's portfolio at about 20%. So we don't expect at any point in time the unsecured book to go beyond 20%. We are introducing personal loans in this quarter, and credit card should come up in the third quarter of this financial year. So when these two come in and they start contributing over a period of time, microfinance portfolio will be adjusted to ensure that all three put together do not exceed 20%. In terms of portfolio mix, there will be a shift between microfinance, personal loan, credit card, as I said, over the next 2 to 3 years. But minus that, more or less, we are fairly where we want to be in terms of our product mix. So I don't think that there will be too dramatic a shift outside of this over the next 2-3 years.
Sure, sir. So I want to circle back to margins, and I'll ask you why. There's likely been a topping of rates. Once the rate cut starts, does the margin change in any way? I just want to throw perspective on that, because may not be likely in FY25. People are now putting that at FY26, analysts, I believe. But nonetheless, what is your fixed rated book versus floating? Just give us perspective on whether margins have an upside potential or not, just from a rate change perspective.
Yeah, actually, we are almost 85% fixed rate loan book bank. So that's a very high level of fixed rate loans for a bank. And that's largely because we deal with a very low income profile of borrowers, and where it's very difficult to explain to them the floating rate concept. So mostly 85% is a fixed rate loan. Because of that, we actually had a very strong negative impact on our yield and NIMs over the last 12 months when the interest rates were going up. This year, assuming that interest rates will remain steady, the market interest rates will remain steady, we should see our NIM also stabilizing. And at some point in time in the future, if the interest rates in the market actually start dropping, that's the time when we should actually see a positive impact on our NIM, because as I mentioned, 85% being fixed, we'll have the reverse impact of what we had last year.
Sure, sir. And okay, so that's with regard to top line. I want to quickly switch over to asset quality. GNPAs have crept up a wee bit when I'm looking at it sequentially. What explains that, and where should it be at steady state? Of course, benign asset quality environment at the moment.
Yeah, see, our pre-COVID GNPA used to be 2.5 to 2.6%, and we are practically back to that level. So I believe that our portfolio has matured since the pandemic, and we are now practically at what is a sustainable steady state basis. And if you look at our GNPA between the third and the fourth quarter, The third quarter GNPA was 2.39% and it was moved to 2.52%. That's almost 13 basis points increase. But we also did a securitization in the fourth quarter. If you kind of adjust for that securitization, then our, the GNPA would come down to 2.39%. So practically where it used to be in the third quarter. So the securitized impact was that 13 basis points in terms of GNPA.
Understood. Sir, very quickly with regard to OPEX to assets remains quite elevated, 6%. Do you expect that to continue going forward? That's one. And ROAs have slipped below 2%. Is that at all a concern, or is that just possibly a quarterly problem and will repair itself in FY25?
Yeah. So
OPEX to assets, sir, and ROA.
Yeah. OPEX to assets, see, we will continue to have some level of expenses being incurred by the bank. We are not really looking to cut cost and save on expenses at this point in time, because we still have a lot of building of the bank to be done for the next 3-4 years. As we have mentioned in our presentation, also investor presentation also, we are looking to invest in people, product and technology. In terms of personal loans, credit cards, AD1 business, and the customer loan app that we have just launched in April, right? So we are looking to invest about 520 crores over a 3-year period on these 4 initiatives, which will keep our cost at the current level. So I don't think our cost as a percentage will really go down in the short term. But in terms of ROA, we are at 1.99% for the full year FY24. And yes, I think we should be able to hold our ROA very close to the 2% level, because we see that the NIM should become steady. As I mentioned earlier, we should see a steady state NIM for the rest of the year, and that should really help us maintaining the bottom line ratios also.
Understood. Thank you so much, Mr. Vasudevan, for all of that perspective. ROAs, mind you, slipping below 2, something to look out for. But thank you so much, Mr. Vasudevan. It's been a pleasure speaking with you.
Thank you.
Well, with that, it's back to you in the studio.
Welcome to NDTV Profit. We have with us a very special guest, Sunil D'Souza, CEO of Tata Consumers, now joining in. Mr. D'Souza, thank you very much. Thanks a ton for joining us today on the show. Firstly, congratulations. FY25 is behind us. You've managed to pull out quite a good quarter. A couple of areas that we'd like you to start with. Firstly, of course, comment on the quarter behind us. Revenue was largely in line with street expectations. Margins have seen an uptick. International business is finally picking up. And you've got those substantial acquisitions as well now behind you.
Yeah, so thanks for having me on the show. And yes, we had a pretty decent quarter and a good end to the year. 9% top line, 22% EBITDA, profit before tax, before exceptionals, plus 46. I think what the reported numbers would be net of, we had a stamp duty on account of the merger with Tata Coffee and some prudent provisions that we took for underutilized assets as well as a financial instrument. Other than that, like you said, I mean, all businesses on growth, that's pleasing to see. We've had 2 months of Capital Foods. With that, the foods business is powering ahead with a 20% top line growth. International, we've always said it should be margin should be accretive to the India business, and they've come to the party now. Very strong numbers. Canada was always strong. UK very strong numbers. US is also turning around the corner. Strong growth in our growth businesses in India. Most importantly, our EBITDA margins for the quarter came in at 16.1%, which was pleasing. We've always, last quarter we said our new benchmark is 15 plus, and this quarter we delivered more than that. The good part was we've reduced working capital. Cash has grown at 27% versus last year. Cash as a percentage of EBITDA is 101%. So we reduced working capital substantially. ROC 280 bips ahead of last year. Strategically, shares more or less on track. Outlets now 4 million. Innovation firing well, 5% plus. Costs well within control. Distribution expansion on track. So all in all, a pretty decent quarter.
It's pretty holistic in that sense. I want to start with one area that we were trying to understand. And, when you talk consumption, we're all asking the big question, is there a concern or is there worry when you talk about rural consumption picking up? Now, while the numbers for you pretty much look in line with what you'd set out for yourself at the start of FY24, like-for-like volume growth is not firing up. And this is not, of course, only for you. But as a market leader, give me a sense of when we can see that. What's happening on the beverages piece? What's happening on rural volume growth? Are you feeling there's a little bit of pressure, or getting into FY25, we should see a substantial pickup?
So let me separate it out into two pieces, right? One is a specific category point and one is the whole rural point. And the reason I'm separating it out is because for salt, for example, we've always guided for a short to medium term growth of 5% in terms of volume and a couple of bips on top of that in value. And this quarter we came in at 4. So salt broadly back on track. Beverages under a little bit of pressure on the volume, but there's also a base effect and multiple other factors playing in. We've seen value growth come in. So I'm sure with the actions that we put in, beverages will come into growth. We were at a 3%. So it's not that this quarter is a continuing string. We were seeing a 3% volume growth. It's only this quarter that it's coming at a flat. On rural per se, I hear the general chatter about FMCGs, rural, etc. But just like to point out that Tata Consumer is in a different place. We were always under-indexed on rural. And one of the things we've gone about is expanding distribution in rural. We've just appointed 1,000 plus distributors in the last 1 year. So effectively 3 distributors per working day, if I may, and 1,800 salespeople. This is to expand distribution down the pop strata as well as expanding bandwidth at the front end in metros. Now, when I break down our numbers, for us, rural growth is 8 and urban growth is 8 in India. In fact, in metros, we've grown at 6 and 50,000 to 1 lakh population towns where we've appointed distributors has grown as 9. So for us, it's a different story. Overall, I do think rural is coming back. I would think another quarter or so, you'll see it coming back strongly. But for overall Tata Consumer, my opportunity is in expanding my distribution and share in rural. That's where we stand.
That's interesting. Well, looking ahead, what is the sort of guidance you're setting out for yourself and for the company for FY25, especially given that there would be complete integration of the recent acquisitions made and revenue accretive 100%, I'd imagine.
Yeah, so effectively, I think we've always said we'll target double-digit growth and EBITDA ahead of our top line. I would say first starting with EBITDA margins, I think we said 15% is now the base and we'll grow above that. That's number one. Number two, on the top lines, obviously now with Organic India being completed just recently, Capital Foods, about 2 months of integration and more or less integration almost complete. Now it boils down to value creation and growth. Earlier, we used to have a growth business classified as ready to drink, Sampann and Soulful, and we had guided for a 20%, contributing to 20% of my portfolio growing at 30. With Organic India Capital Foods coming in, we are now guiding for 30% of the portfolio, which is growth businesses growing at 30. On beverages and salt, which is the core business, I would say broadly, we're saying mid-single digit volume and a couple of bips on that on value. On salt, we've already delivered that similar number this quarter. Beverages, we're confident that we will come to that in FY25. And international, we've always said mid-single digit top line and EBITDA margins ahead of India.